Hey everybody, Andrew the Realtor here, and welcome to my June market update. May numbers, what it means in June, and I'm going to get right into this because, well, frankly, there's a lot of information. I want to make sure you guys get all of this. So I'm going to minimize myself a little bit here and get to this. Here we go. Slide show. Okay. So I've been getting this earlier and earlier out. I've given these out earlier and earlier into the months because, quite frankly, as you guys might have seen on my YouTube channel, I'm getting more and more views every month with these. And honestly, the information is very important. Even just this year, a couple times I already had really close calls with clients, and learning from those, learning what best could be done next time, or more importantly, what can happen, and to be as prepared as possible, I have found to be the biggest blessing for my clients this year. So this month specifically, I'm really going to hammer ever so politely and respectfully on buyers specifically at this time because the market is ripe for buyers to come in and get a half decent deal, certainly better than they would have gotten even earlier this year, never mind last year. So please have a look. So first of all, just the numbers. So May, there's a pattern here, and it's going to go into what I'll be talking about in just a minute or two, and that is the prices are on average still high this year versus last year. But let's go to monthly. This is the monthly, meaning this is May, last month, May of 22 versus April of 2022. And you'll notice that the average price went down a little bit. April was still a busy month. The market changed roughly around the March break air time, maybe a little bit after March break, and has been kind of shifting ever since. So in a market shift, numbers, information is very, very important. I'm going to give you some great ones shortly. So average price down a little bit, 3%, not a huge difference. Keep in mind, this is the average price, always with a grain of salt. And active listings, here's the biggie. Active listings May to May from April this year, up 17.8%. So we were in about 13,000. We were in May 15,500. Right now, in the beginning of June, we're almost at 16,000, 15,700, 15,800, depending on what day, so to speak. So those of you who have been watching these updates for the past year or two or three or four, you know that about 20,000 active listings is a balanced market. We're not quite there to a balanced market yet, but we're getting close, very close. And it is June. Things tend to usually start slowing down in June a little bit, which is also something to keep in mind. But here's the thing. Here's the point. Listings, inventory is up. Sales are down, and this is something I'm going to show you right here. This is May 2022 compared to May 2021. Down sales, not price. Sales are down 38.8, so almost 40%. That's a huge drop. Now, fair, speak of this fairly, apples to apples. May of 2021 was a busy month, very busy month. So that's something to keep in mind as well. And now we're dealing with this market shift. So the psychological effect on buyers is still continuing. And I'm really trying to, even in this video right here, to kind of dissuade some of that. So sales are down. Average price is still up. So homeowners, such as myself and many of you, probably most of you, you are looking at still an increase of almost 10% on average. And we'll see what the differences are down below here. So the important thing is price overall still up, which is pretty amazing considering everything that has been happening, including the interest rates, which I'll talk about in a second. But sales are down tremendously. Now, this year overall, sales are still going to be, in terms of a normal year, quite busy. We're still going to get into probably close to that 100,000 sales that I've been talking about in the past few updates as my forecast. And so far this year, we're right about there. We're not quite at 50,000 yet. We're going to be there probably. So 100,000 for the year, quite likely, somewhere near there. Active listings last month. Active listings meaning properties that are on the market currently for sale were, again, almost 15,500, way up from May of 2021. So think about it. Inventory higher, sales lower. What does that mean? More houses on the market. So if you look at the numbers of new listings, sales, and active listings, you're roughly in a range of maybe one every two homes selling for that specific month. Now, eventually, most of the homes do in fact sell, but that's a huge difference from what was before. I mean, even the days on market and property over here is up 20% to 18. And that's including those homes that are still selling in multiple offer situations after only a few days. I mention that because if that wasn't even a thing, if offer bidding wars and that still happens occasionally, if that wasn't even a thing, this days on market would be much higher. Do you know what I'm saying? If you only have a week to buy a house, well, you're going to buy it in a week. That's the multiple offer situation. So all that to say, higher inventory, buyers note higher inventory, lower sales. opportunity. So next, moving right along. Myself out of the way here. These are the 5 stages of a market. I think if there were was it Richard Robbins for this specific thing here. This is every market naturally. Now keep in mind this wave is not the price. This is not indicative of price going up and going down, although they do tend to correlate with that. This is more in terms of actual activity, and we are at somewhere between 4 and 5, 4-ish. So the best homes, very specific kind of homes, unique homes in areas where there's not a lot of turnover. Those homes, if they're beautiful, especially or priced particularly well, they can go into multiple offers. And so multiple offers, low conditions, those kinds of things for the most part, and some that go into multiple offer situations and don't get what they want. A lot of homes are selling more as per normal, listed normal price, sold at normal price. So that is happening right now. And again, this theme that I want to get through, higher inventory, lower sales, buyers, please take note. I'll be harping on that. Forgive me if I repeated myself. So this is where we are. And again, this is not indicative of price. But this continues. And so what's going to happen eventually? Eventually, we're going to get into almost all properties having conditions as per normal market all those years ago. And eventually, as demand increases, and I'll talk about that, as interest rates begin to eventually wane down a little bit, we're going to go right back into this area with increasing market activity. When will it happen? I'm not exactly sure, but stay with me here. Interest rates. Now, that was activity in the previous slide. We're talking about activity. Right now, we're towards the lower end. So sliding down in terms of activity, in terms of sales. Interest rates, very important. And initially, these next 2 slides, those of you who are on the buying side of things might think, wow, Andrew, you're actually telling me, you're giving me information to probably want to slow down. Maybe wait a little bit more. Let me tell you why that might be a bad idea. But first, let's look at interest rates. Canada is more sensitive to interest rates than the US. We're a little more leveraged. So that's important. Okay, good to know. Interest rates are going to affect, they have been affecting us already. Certainly homeowners, those will be up for a refinance. Your mortgage is going to be more expensive. So per month, those of you who are looking to buy, are going to be in the same situation. That's important to note. Market is pricing in an aggressive tightening trajectory. So this is roughly, this is Benjamin Tal, taking one of his notes here, one of his slides. He's the head economist of CIBC. And of course, you're looking at Bank of Canada or the Fed, roughly speaking, maybe into 3%. That's anticipation anyway. Who knows if this will actually happen? We don't have an election until what, 2 years from now, a federal election, and of course we've got also the provincial election in Ontario we just had. The PC's won. Why I mention that is during election time, weird things happen. After election times, those things tend to kind of subside a little because, well, they already got elected. They don't need to make any more promises. Please note. So interest rates moving up. That's the theme here for the next couple of minutes. This is a few forecasts. Keep in mind these are just forecasts of where these things are going to end up in the end of 22, end of 23. I mean, some are 3% here, so that's important to know. You guys can always pause and take a look at these things. This is different banks and what their forecasts are. So we're at right now at what, 1.5, I think. So there's some room to go up yet. Please keep that in mind. Now, rent inflation. This is along those same lines, only because rent affects 2 different people: the landlord who is getting the rent and the renter who is paying the rent. Either way, the rent is going up, so possibly a benefit to investors. Those of you who are investors know that rent was kind of slow and certainly lower in the past couple of years during COVID time and such. Now they're starting to come up, and look at this. House price index. Yes, it's clearly gone up tremendously, but notice that the rents are going up. I've noticed it already so far this year. So keep that in mind. Again, I'm hammering the buyers a little bit. Forgive me. If you're continuing to rent, it's going to go up, as are the interest rates. Of course, there's the inevitable monthly immigration update. lots of immigration. I could do that pretty much every month. But again, the forecast is higher. Canada and US, of course, we're way above our neighbors to the south. In terms of the immigration, how much immigration we have. Tremendous immigration. And not necessarily a bad thing, but they're human beings, often human beings who are skilled, human beings who have money. And these human beings who are skilled and have money will be probably able to afford some sort of real estate. So a certain percentage of all those people is going to be in the buyer pool, certainly in the GTA, Toronto itself being a city of great magnitude and great magnet, if you will, for immigration for many, many good reasons. So we've got higher interest rates increasing, we've got rents increasing, and we got immigration, which is going to continue to increase. So something important here. I'm going to minimize myself even more if I can. No, I can't. Okay. This comes courtesy of my buddy Joe Bladdock. You guys have those of you who have had these newsletters and updates before, you know about Joe. He's a mortgage broker, one of the few that I like to use. So I I want to give him credit because I totally stole this from him. This is important. Okay, this is where we've been at. I've been mentioning the fact that there's higher inventory, a lower number of sales, which buyers take note. As you know, little light bulbs should be going off. Then we talked about the interest rates going up. Okay, well, Andrew, isn't that going to make the market go down in terms of price? Maybe a little bit more, possibly. We don't know, and we don't know. But here is something that is very, very worth noting. Demand is going to come. Immigration is not going to stop. So that demand is going to come back sooner or later. Sooner or later, the psychological effect for buyers is going to stop. Is going to wane, and eventually, like I mentioned last month, you and 50,000 of your closest friends are going to have the same great idea. Oh, you know what? Now it's time to enter the market. At that point, you'll maybe say, "Hey, listen to Andrew a month or two ago." Now, with many banks raising their 5-year fixed mortgage rates to 5% plus this morning, and this was this morning. This is June the 7th. I'll tell you guys right now when I'm recording this. So, whatever your lender, your bank might be at in terms of if you're buying right now, if you have a fixed rate or if you're you're already financed right now, you don't have to worry about this necessarily. But keep in mind, those who are buyers. Please note you'll say to me, well, but prices have been heading down, so it'll be cheaper to buy a home now or later. Well, listen, we talked about the interest going up. I showed you the graph about the interest rates forecast, all upwards, certainly for the next few months at least. Most of those are saying till the next year. I still feel like maybe that won't change. That'll change, and maybe there'll be a decrease at some point in time, depending on what happens with the market and inflation and everything else. Still, banks who got more money than me are thinking it's going to go up. So note here, assuming a house you're going to buy is 100,000 cheaper. This is an easy example. Don't get on me for the math. It's just a very simple way. But look at it. This is legit. A $600,000 mortgage in 2021, 2,600. $500,000 mortgage this year at the rates we're talking about currently, June 2022. Look at that, $400 higher. Excuse me, about $300, $310 higher. You think that's significant? Still higher. So are you actually still getting a deal? Assuming it's 150,000 cheaper, 600 versus 450 this year, still higher. Are you really winning? What if you considered less about this and the fact that the prices are decent and inventory is high? For the first time in a very long time, you might not have intense competition. You might throw in a financing condition, maybe, God forbid, an inspection on an older detached home. The thought. Buyers, I'm very serious. Let me go to this. You guys remember this slide from last month? Those of you who watched it. I think this is a biggie. I love this. I wish about then. I wish about then. But yeah, I'm going to wait a little bit until the market drops some more. It's a bad time to get in right now. Missed opportunity. Let me take you through the list. So inventory is increasing, as I've been harping. Sales are down. Interest rates are playing a role, as they do always, because the graph that I showed you, more so even than our neighbors to the south. Interest rates are increasing, as we've seen and as we're expecting, along with all those banks. Rent is increasing. So investors take note. As rent increases, you get something for a good price now. You can increase the rent. You can have a strong rent moving forward. I just saw today probably about 12 properties just within the GTA that are been sitting on the market that have great rent already coming through. May even get cash flow depending on your financing, which is astounding. So that investors take note. Renters take note. You're renting right now. You're going to wait till the market comes down a little bit. Well, you already noticed how much waiting costs you, and it actually costs you money on a per month basis in terms of interest rate hike, which means you pay more for your mortgage. But also your rent is going to probably go up. And if you're going to rent, and of course, immigration. There's always the demand over there. So really, is it really worth making this mistake again? In all seriousness. So, guys, honestly, this isn't even a sales pitch. It's just I'm looking out for people to do the right thing. So here we go. What are the takeaways from all this? Please note. Move myself again. I'm not important. The information is. Oops. Excusez-moi. Takeaways from all this Q&A. So two different parties, just like last month. In fact, look at last month for the details of some of this. Buyers, when people are selling, you should be buying. You should be buying. Guys, you've seen the stuff. And you've seen how much waiting can cost you in terms of interest rates. And it's a summer, which is a little bit slower. And people that are on the market want to sell. And there's a lot of them. So guys, if you're looking to buy, or you've been thinking of buying this year, now is a great time to do it. which also applies to group two, the sellers. Notice this. Sellers, it sounds like, well, I've been just dealing with nothing but bad news. Well, no, you might recall that the numbers are higher still than last year, which is phenomenal. Almost 10% on average. Pretty good investment, if you ask me, considering all the crazy stuff that's happening in terms of the shifting market and inflation going crazy. Not our fault, the government. You have to know your numbers. And last month's newsletter update, market update, you can check it out on my YouTube, or you can check your emails. I had more details in terms of that. Seller, you have to know your numbers. You're still in a good spot. Why? Because you're selling and buying something probably, right? If you're selling, you're still up than last year, so you're still doing it well. Overall, in the past 5, 10, 15, 20 years, how long you had your property, you're making quite a killing on it. But, if you're selling and buying, if you're moving, upsizing or downsizing, this is a great time. An absolutely great time. Why? Because on the buy side, it's actually more flexible. But again, you have to know your numbers. How many days are market in your area? How many days are market in the area you're buying? How fast can you have your house ready? All these kinds of things. I can help you with that. I'm more than happy. In fact, you guys have my information at the bottom of the video or the bottom of the newsletter that I'm sending this out in. Guys, you have to know your numbers. Sellers, it's not a bad time. It honestly isn't. But you have to know what you're doing. Because again, if you're buying something, this is a great time. There's stuff available out there, and it's going to continue for the next little bit. How much longer? I don't know. I'll tell you this: it'll probably pick up in the fall. So I would take advantage of the summer. I'll take advantage of the higher inventory and the lack of competition for the most part, and take advantage of that. Again, if you're selling, knowing your information, knowing your numbers, and if you're buying, getting in on it, and getting peer approved, and getting ready before the next interest hike. Lock down a half decent interest rate with a good lender. I got mortgage people. You can always ask me, and get out there and start looking. So, guys, until next month, until July, I hope this information is worth it. I don't want to be overly aggressive. Again, I don't even care about the production quality of anything. You can see the back of my office here. But guys, this is important information. You need to know this. If you're doing anything real estate related like this, always know what's going on. Always know the numbers. If you have any questions, contact me. If you're watching this on YouTube, click like, subscribe, whatever people do on YouTube. I just want to give you guys good information. I hope you're well. Take care. Enjoy your June, the nicer weather, short sleeves, and I'll see you guys out in July. Take care.